Thanks for staying with us. Major shopping malls in the country are seeing a growth despite the challenging economic times. Now, this is according to one index report which tracks the performance of 4 million square meter prime retail space in the country and Namibia for listed and unlisted property funds. Let's get a sense now of what's behind this growth, and we speak to Zwelakhe Mnguni, retail analyst and Benguela Global Fund Manager's Chief Investment Officer. Zwelakhe, thank you so much for your time this afternoon. Do appreciate it. Let's just start with, looking at what has been coming out, particularly from this particular index. What is behind this growth? Because for a number of people, it could be unexpected.
Look, I think there are two things that we have to keep in mind here. I think the first thing is that you have the retail sector having suffered quite a big a decline during COVID. And an element of recovery continues to feature in these numbers that we are seeing in terms of the growth. I think the second element that is playing a major role is also the fact that we've seen quite a significant increase in inflation, especially at the retail level. I mean, whether you're talking about food, you're talking about clothing, there has been quite a bit of inflation. And those two elements are essentially the key drivers that are driving the strong performance within the retail shopping center market. But the main one would be the inflation. I mean, when we look at the numbers from the retailers, Woolworths, Spar, Pick n Pay, and many of them are losing volumes, but ShopRite has been gaining some. But broadly speaking, that inflation would be a major factor. And
Zwelakhe, one then, would ask, if you look at the picture pre-pandemic levels and the devastation that we also saw and the difficulties that we saw during that time, and looking at where things stand now, would you say that the growth has been substantive?
It has been substantive. I think the recovery has been quite meaningful. I think typically people were locked in for quite some time, and many of them accumulated some savings. And they are now at a stage where they are free to go anywhere they want. And part of those places that they go to are shopping malls. And certainly the growth has been substantive. It's only a few categories that haven't been able to perform above the 2019 levels, but most of them are actually well ahead of that level. So the recovery has been strong. And I think, as I said, the element of inflation has played a role, but it has been a strong recovery also from a raw consumption point of view, if I could call it that.
So someone could then ask and say that, are the big centers also experiencing this particular recovery, would you say?
I think they are. I mean, if you look at the growth numbers that have been put out in the report, essentially the big centers have done actually better than most other centers. And the reason being that because they've got a one-stop shop kind of environment where you can go and you buy everything that you need at one place, they tend to have attract a lot more footfall. And because of that footfall, they tend to get like a better trading density. So they've done exceptionally well. I mean, I think they are about 15-16% above 2019 and 10% year on year above 2022.
And how sustainable is that going into the future, especially because you mentioned something very critical? A number of people, when they think about going to the shops, they want somewhere where they can be able to get everything in the same position, in the same place, as opposed to a smaller place where you just get one bit and then you need to go to another spot. So how sustainable would that growth be looking into the future?
Look, I think probably we've seen a slowdown, the post-COVID slowdown in terms of the growth rate. But I think the trend should be relatively stable. I mean, I think if you look at around 6-7% inflation at a retail level, and you add maybe 2%, 3% real, you should be getting to 10%, close to 10%. So I do think that it is sustainable. I think the retail industry is doing well, especially the luxury goods space where people have less constrained budgets. They can shop a bit more in that market. So there is an element of differentiation when it comes to the LSMs. But if you look at the lower LSMs, or at least if you look at the furniture, I mean, it is one sector that has been struggling. It did very well in the early days of post-COVID, but slowed down significantly. So there is a differentiation, but on average, I'd say probably 10%, 8 to 10% would be a good number going forward, and that would be a sustainable number.
And Zwelakhe, I'm going to ask you something, a bit more selfishly, because the e-commerce industry is one where I would fit in the most, because I'm not a mall person, and I'm sure a number of our viewers are watching and they share the same sentiments. Where does it all fit in then? Because it does look like some people are also opting for more online interaction as opposed to the physical store interaction.
Look, that part of the retail industry is growing at a very, very fast pace. I think we've seen numbers north of 20% for most of the retailers that have an e-commerce offering. Some of them go as high as 50%. The bottom line is that the e-commerce will slowly but surely eat into some of the growth of the bricks and mortar businesses, but I don't think where we are as a country, as an economy, in terms of the level of sophistication, in terms of internet, we could actually write off the bricks and mortar businesses. In other words, they're going to the malls business. We can't write that off as yet. We need to have a level of internet utilization that would allow people to accept the e-commerce element. I mean, there are barriers like, do you trust doing transactions on e-commerce? And I think what COVID has done is it has enabled people to be a bit more trusting on e-commerce, so accelerated that trend. But I don't think we are at any point where we could say right off e-commerce.
All right.
Right, bricks and mortar.
Yeah, quite an interesting outlook that you've painted for us. Thank you so much, Zwelakhe. Do appreciate it. That is Zwelakhe Mnguni, retail analyst and Benguela Global Fund Manager's Chief Investment Officer.